So hello and welcome to today's special deep dive session from FX to crypto, what tools of the trade active trading firms can use to take advantage of crypto markets. My name is Ian Simpson, Director of Marketing and Communications at RULEMATCH, and it's a pleasure to have you with us today. The session today is going to, as it sounds, be a deep dive into the topic of crypto markets, but also through the lens of the FX markets. We'll be looking at some of the structure and infrastructure of the markets to understand that a little bit, but also looking at some things perhaps a little bit boring or perhaps slightly unsexy, things that often go unnoticed by people, but things which for active trading firms can actually be very powerful and very potent. You might even say as powerful and potent as the engine under the hood of a Ferrari SF90. And along the way, we might also, just so you know, touch on the topic of fighter jets, Steve Jobs, and Walmart. So look out for that. If you're joining today, you're probably a lot like myself, keeping one eye on the crypto markets, which is totally understandable. Market conditions are pretty good right now. But what is perhaps, clear to all of us here is that it's not too magical or too hard to make money in markets as they are today. Everybody can do it. What is more difficult and perhaps more interesting, but equally lucrative, is to win on a consistent basis and win the market all the time. So that's why these tools that we'll be exploring today are very, very interesting. To join the discussion, we have Lars Holst, CEO of GCEX, as well as Florian Stasch, Director of Sales at RULEMATCH. Lars is a veteran of the financial industry and a pioneer. Actually, he was one of the first employees at Saxo Bank, also spent some time at other institutions like State Street and Dresdner Kleinwort before founding GCEX in 2018. They're, of course, a London-based digital prime broker serving active trading firms, hedge funds, brokers, and others, and covering a range of assets from FX to commodities to crypto. Florian is also a veteran of the banking world on the structured products and derivative side, from some household names like ABN AMRO, BNP Paribas, and the Royal Bank of Scotland. So as I said, we'll be diving into the topic today. There will be time at the end, perhaps, for a few questions. And just to reiterate, nothing that we say today is investment advice, but rather a deep dive into the market and some things that you might not know about crypto and FX markets. So to set the stage, let's go first to Lars and kind of understand the market structure of FX, what it is, knowing that there are some similarities and differences between FX and crypto. Maybe, Lars, can you give us kind of an overview of the structure, how things are, how market operators and market participants interact so that we can kind of see that from a high-level view?
Yeah, thanks, Ian, for having me here today and for organizing all of this. I'm really sorry sometimes when people they call me a industry veteran. That makes me sound very, very old. But thanks anyway. Maybe you can also say we're not older, we're just wiser. So I'll take it from that side instead. Well, the FX market, of course, is evolving since also the financial crisis. It's many moons ago by now, but fundamentally it's very decentralized and very much focused on an OTC volume. So unlike what Florian will get to, it's primarily OTC where we see the volume, and it is by volume the biggest market in the world, counting the trillions of dollars a day. So you will connect to banks, tier one banks, household names. Of course, UBS in Switzerland is one of the biggest. You can just go by the Euromoney ranking, then you'll see who's who and what market share the different banks they have. but it's primarily OTC driven and not on centralized exchanges like the CME and similar centralized exchanges. Plus, in recent years, we've also seen the main banks, tier one banks, being overtaken by non-bank market makers because of the capital restrictions that the financial crisis have imposed on banks. But fundamentally, again, decentralized and yeah, very OTC driven.
Mm-hmm. And highly fragmented overall, you would say.
Very fragmented, local players, regional players.
Mm-hmm.
So you will have a specialist bank in Scandi currencies, specialist bank in APAC currencies, Aussie Kiva, Aussie Kiwi, Canadian dollar, etc. So very fragmented and very decentralized. Yes.
Mm-hmm. And so then now turning to crypto, let's look at that. There are some things I think which you can highlight as similarities, but Florian, there's not everything that is just exactly the same. Is that correct?
Yeah, correct. And first of all, welcome from my side as well. Yeah, you're right. I mean, crypto is in many ways very similar to FX. I mean, in fact, it's just another asset class, a very exciting asset class. However, it's not always handled in the same way. Why is that the case? Well, because the market infrastructure in crypto, it differs sometimes pretty significantly from traditional finance and from traditional financial infrastructure. Let me maybe just highlight three of them. So one is exchanges. Second is the retail focus that we often see in crypto. And third is pre-funding. So the so-called crypto exchanges, I mean, let's face it, they aren't really exchanges in the traditional sense, at least not what some people of you guys on.
So you mean what people say an exchange out there, the names that we all know, we don't necessarily have to mention, aren't exchanges actually?
Exactly. So they call themselves exchanges, but they aren't really exchanges in the traditional sense. So not comparable to securities exchanges. They act more like brokers or banks on a very beautiful island sometimes, but without the licenses that we normally use in TradFi for the very same purpose. And that means a lot of risk involved, and with that also costs in handling it. So, and number two is the retail focus. That's very different in the crypto market. Traditional crypto exchange infrastructure, market infrastructure, and processes were originally designed for retail, but not for institutional trading firms. Take low latency trading as an example. So traditional crypto infrastructure is extremely slow and slow by design. I mean, if you think about it, if you have 120 million users that all squeeze through the same bottleneck, it's by definition or by design slow. And as a professional trading firm, that feels like I'm stuck in line with these 120 million retail customers, if you will, in front of Walmart that all queue up buying toothpaste and diapers. Well, I was actually planning to buy and sell a couple of Ferraris in order to harvest some price differences, right? And third point I want to highlight is the pre-funding fact. So if you want to trade on one of those crypto venues, you have to send money first in order to be ready to trade when you actually want to trade.
Isn't that a good thing though? I mean, you want to trade, you put it out there and go with it. I mean,
well, if you do that in TradFi, you usually have a licensed broker or a bank on the other side, so that allows you to handle your counterparty risk in a reasonable manner. But as I said, these firms usually do not have a bank license or securities firm license or broker-dealer license. So they are usually just limited, also sometimes in jurisdictions that are far, far away from from our own jurisdiction in Europe and the UK and so on. So if something goes wrong, it's quite difficult to get your hand on your assets. And yeah, we have seen a couple of months ago with the FTX case how that turns out. So that's something that's very special about crypto, and you don't find this kind of setup in traditional finance.
You wouldn't find that in FX. That's a clear kind of.
I mean, I don't think so. At least, I mean, I let Lars comment on that if he wants to. But in trading traditional assets like equities, for instance, and other traditional assets, usually you trade today and you settle later. And that is also much more capital efficient because you buy today and you pay later, right? So that's oftentimes much better for most of the institutional trading firms active in the space. So, but this procedure was born out of necessity with traditional crypto venues, because something like post-trade settlement, as we know it in traditional finance, is simply something which is not feasible in crypto markets, and especially not with traditional crypto so-called exchanges.
Mm-hmm. Mm-hmm. So I think, yeah, we have kind of a picture of some similarities, some differences. Also, I think one thing we can point out that there's a lot of liquidity in these global markets, FX and crypto, both, of course, more liquidity at the top of the chart for crypto. And yet, in some ways, crypto markets a little bit mishmashed, things coming together very quickly, of course, in a new technology. That's often the way it is, but it's a little bit dystopian in that if you are an institution, an active trading firm, you want to really do big business, and yet here you are, yeah, in line at Walmart. Not exactly ideal. A little bit kind of like the landscape maybe from so-called smartphones before Steve Jobs came along with an iPhone. That obviously changed things quite a bit. So looking at all of this and where it is today, like what kind of opportunities would there be? How would you deal with this if you're an active trading firm or an institution, Florian?
Yeah, I mean, don't get me wrong. I mean, these, let's say, aspects that I just mentioned, they are not necessarily bad, right? So these are, let's say, inefficiencies or sign of a nascent market, but that's exactly also where the opportunity lies, right? So in trading, this is actually oftentimes what we are looking for. And the question is more like, okay, how can I make use of these inefficiencies, and how can I monetize them? Again, it's like, yeah, we want to show up to a race in a car when everybody else is using a tricycle, right? So that's what we're looking for, and we need the right tools in order to make that happen and to get this competitive advantage. And I think that's exactly one reason why trading crypto can be so exciting, because it's very nascent, and not everything has been, let's say, squeezed out and harvested. And actually, it turns out that we can learn a lot and borrow a lot of technology and processes that work incredibly well in traditional finance. And we can use these processes and techniques in crypto trading.
Boring old traditional finance.
Yes, but this, let's say, technology has been proven to work nicely over decades and has been developed. I'll just give you 3 examples. So speed is one thing. Capital efficiency in trading is very important, and leverage closely tied to the capital efficiency topic. So if you can enable real high frequency trading in crypto by using the same technology that's already trusted by existing high frequency trading firms and platforms, I mean, that's how you can actually get a competitive advantage. In our case, in the case of RULEMATCH, that meant that we teamed up with NASDAQ. NASDAQ is not only an exchange, but also a provider of exchange technology. And in fact, they offer the fastest exchange technology on the planet. And if you want to introduce real high frequency trading into crypto in order to get a competitive advantage, you have to use the fastest tools. You cannot run a Formula One race with a BW, right? Mm-hmm. So and that also, I mean, it goes much further than that, right? So you also need to employ processes that we know from high frequency trading in the traditional world, like running stuff on premise and none of that funny business in the cloud, for instance.
In the cloud, you mean like actually matching trades in the cloud somewhere up in the air? Or...
Exactly. So that's commonly used in traditional crypto landscapes, and that works okay for retail. I mean, speed doesn't really matter there. But for professional trading firms that want to harvest some opportunities in the market, obviously that is not fast enough.
Mm-hmm. And just back to Lars, I mean, in FX and in traditional markets where you have a lot of experience, speed is already a thing, right? This is par for the game, table stakes, so to say.
Yeah, definitely. So I think some of the high frequency trading houses, they even put their own cables across the Atlantic from London to New York just to gain a few milliseconds, or was it microseconds? I don't know. So I think the opportunities have kind of been well, they're almost gone to the extent because it's a very, very efficient market. And thank you, Florian. Of course, the main difference, or one of the main differences between FX and crypto is really what Florian also pointed to. You know, crypto, lack of regulation. It's kind of inferior technology to a large extent, and it's run by people that have no clue about risk and I hate this word TradFi. So I'm not an expert just because I'm TradFi, because it's largely common sense. I'm sure we've all remember the videos with was it the risk officer from FTX and it was always doubling down or whatever in terms of risk management. So of course, but I would call it common sense instead. But grown-up technology, grown-up people, and regulation is of course probably the three pillars. But it's not different to FX when I started, unfortunately, 25 years ago. And sorry, not having a go at Switzerland, but Switzerland was also, the Wild West. If you were a member of an SAO, then you could essentially run a brokerage company, and it was also fairly crap technology, and the people were in it for the short-term gain. Again, probably like FTX. So today, I think we're seeing this move towards regulation. In Europe with MiCA, DLT regulation in Switzerland. You're the Swiss experts. Now there's some news out about Trump. He also wants to make it more accessible in the US. But we see it across the board that regulation is coming in. RULEMATCH, of course, is technology, NASDAQ technology. We don't all need. We don't all need to go on NASDAQ technology. We're not a agency for NASDAQ. There are alternatives, but of course that is the state of the art. And I have to admit here, I only have an Audi, so Volkswagen is also adequate for most people. And then of course, the people look at who's behind it. That you know who you're dealing with. RULEMATCH backed by real people in a proper jurisdiction. I would also love to be in Cayman or Bahamas or similar, but I'm restricted by regulation in the EU and the UK and in the UAE for GCEX at least.
Going back to what you were talking about, Florian, you mentioned also capital efficiency and processes from TradFi. Sorry to say that word again, Lars, but what were you talking about there, Florian?
Yeah, I mean, this is also, let's say, an aspect that we can borrow from traditional finance that has been proven to work quite nicely. I mean, in crypto, as I said, you go first, right? So you send your money somewhere in order to trade. In TradFi, I'm sorry, I will continue to use that word. I'm so used to it. You trade today and you settle later. And when you combine that, if you go a step further and you combine that with a traditional clearinghouse and a real delivery versus payment mechanism, then it becomes even more interesting, and settlement actually gets very efficient, and ultimately your capital gets used in a very efficient way. So maybe I've traded 100 million worth of Bitcoin in and out during a day, but at the end of the trading session, I might not settle at all. Or just a Bitcoin, because everything nets out nicely. That's the power of clearing, and this is something that hasn't been used in crypto until now, and we can gain a lot of efficiency by using these techniques that we know from trading traditional assets.
Again, that word efficiency sounds super boring to me just when I think about it, process efficiency and so on and so forth. But for an active trading firm, somebody that is doing big volumes, turning millions 10, 20 times a day, doing all kinds of things like this, it's absolutely essential.
Yeah, again, I mean, what works for retail must not necessarily be sufficient for traditional trading firms, as you say, who do tens and hundreds of million volume per day. Then suddenly you need completely different tools.
Mm-hmm. And the final point, I think you were mentioning leverage, or again something that we know from long established markets. Let me put it that way instead of using the other word, but that is an opportunity, obviously an opportunity to augment, to jump up a level, right, in what you're doing.
Yeah, I mean, leverage is a strong word, but it can also be tied very closely to capital efficiency. And in our case, it is enabled by the way that RuleMatch is set up and functions. So if you don't have to settle immediately, but only put down, let's say, a fraction of the capital that is needed for trading, a clearing margin, for instance, then you can assume much more exposure. And as I said, that becomes even more interesting if you add multilateral clearing to that, meaning.
Can you just explain that just in a nutshell? Multilateral clearing for trading.
So that means that you do not only net your own trades, but you also net the trades that have been done with other market participants and in other assets.
So all across the whole thing comes up very neatly, nicely, elegantly together.
Yeah, and just to throw in a number here, I mean, that can increase capital efficiency by up to 90%. That just as a ballpark number, so that you have an idea what we're talking about.
Mm-hmm. This is something that we know also from FX markets, Lars, with multilateral clearing and netting for very active traders.
Yes, absolutely. So I think that's almost default, and of course clients will always ask for leverage terms and nets, settlement, etc. So again, something that's just part of the parcel, and something we have done for many years throughout the companies where I have worked, and of course we also do so at GCEX, and that's one of the main advantages by dealing with us, and we can of course give access to RuleMatch, because what Florian was also getting to, a lot of the people that call themselves crypto exchanges, they're not exchanges, in the sense of the CME or Euronext or the LSE. They're just brokers, but they beauty themselves up and call themselves exchanges.
Lipstick, so to say.
Pardon?
Lipstick on a pig, so to say.
Yeah. That's, yes, I wouldn't dare say that, but yes, Whereas essentially they're just broker dealers, and call a spade for a spade, and we are a broker dealer. We don't run matching technology to the same way as RuleMatch they do. We give access to liquidity. We are the prime broker where we give access to RuleMatch and other venues, and then you can have one account for settlement and netting, and yes, we obviously we mirror the leverage that RuleMatch they will afford us, and we can maybe even improve on the leverage, because that's also part of the parcel on the downstream clients, because we are giving them access to the exchange or to RuleMatch, and then we will deal with the risk management downstream, and we will do it probably more aggressive in the way we will not give the same lenience on when you need to settle and you need to top up. It's real-time mark to market, and we have real-time risk management and tools for the downstream clients, and that's where we come into the equation, that RuleMatch they don't need to worry about the downstream risk management. That's where regulated entities like GCEX we come in.
Mm-hmm. So if we kind of gel it all together, as we're talking about, moving from FX into crypto, if that is what you're thinking of doing as an active trading firm, some of these tools that we've talked about, some of these things that as you say are part of the parcel or part of the course in FX can be a great advantage if you are moving into the new market of crypto. That's, again, just to say it out loud, right? Speed and capital efficiency, or maybe more explicitly, post-trade settlement, and then leverage on top of that. And Florian, if you put those kind of in the ranking or stack them one on top of the other, how does that all fit together to be a really powerful kind of setup?
Yeah, I mean,
can I say not only capital efficiency but also capital safety?
Sure.
Because again, we all like it's very exotic to have an offshore account, but there are probably reasons why they are offshore, and I don't know, of course, leave aside the recent merger with the other Swiss bank. So, but I do think largely that Swiss banks, of course, are also super safe. So it's not only capital efficient, but also that I guess it's also capital efficient that you can get your money back. But let's also make sure we say that loud: capital efficiency and capital safety.
Mm-hmm.
Sorry to interrupt you.
Mm-hmm.
Yeah, and capital safety is also a cost factor, right? Or risk is also a cost factor. The more risk, the more cost is involved. The more processes, people you need to employ, and if it's safe, it gets way easier. But yeah, I mean, in terms of tools that we can use in order to get ahead of the market. I mean, you might remember the movie that has been done around the financial crisis, a Margin Call, if you remember that, where this big boss sits in the boardroom with his people, and he says there are 3 ways to make a living in this business: be first, be smarter, or cheat. And he goes on saying, now I don't cheat. And although I like to think we have some pretty smart people in this building, it is a hell of a lot easier to just be first. And I think he's right. It's probably the easiest lever to just make sure you're first.
And it's fast.
Fast. And that means being fast and using fast tools and making sure you are faster than most of the other people. And yeah, in the end, it's simple, right? The fastest often wins. And to give you a bit of color how traditional crypto markets are in terms of speed. Traditional crypto central limit order books, they match in the area of milliseconds. At RuleMatch, for instance, we match in the area of 25 or lower microseconds. So just As a reminder, the difference between microseconds and milliseconds is a factor of 1,000.
Mm-hmm.
So that's kind of like
pretty big.
Yeah, I mean that's significant. It's not, let's say, 2x or 3x. It's a tiny bit more. And the difference is kind of like if you show up in an F-16 fighter jet, while everybody else is still pushing around shopping carts at Walmart. That's about the difference.
Mm-hmm. Mm-hmm. So that speed, and then the capital efficiency of a post-trade settlement, if you are a fast trading company, you trade 1,000 times a day, you have one, as you kind of outlined, one settlement transaction to make. It's, again, maybe going back to Steve Jobs, kind of like that old 1,000 songs in your pocket with the iPod, right? 1,000 songs, one device, here 1,000 trades or more, and one simple transaction at the end of the day.
Yeah, I mean, you're right. I mean, that's important to point out. I mean, why does post-trade settlement make sense? Because it gives you time to trade and time to net your trade. So in let's say traditional crypto markets, you trade 1,000 times and you settle 1,000 times. If you have time in between trading and settlement, you have the chance to net out the trades. And settling one time instead of 1,000 times, yeah, one time is better than 1,000.
Especially in crypto assets, if you are having to make 1,000 blockchain transactions, as we know that incurs fees and so on and so forth, also highly inefficient and not cost effective.
Correct.
Mm-hmm. And leverage, so just to understand that again, leverage, of course, is out there in other markets, and yet with a clearing margin that is baked into the system, right? A tool that you wouldn't really find at any other so-called exchange.
Yeah, exactly. I mean, I scratched that already a little bit. I mean, there are, let's say, two elements here, and one is basically the very way RuleMatch functions with multilateral clearing and post-trade settlement, and only with the clearing margin that needs to be put down. Just to give you an example, Bitcoin, for instance. Bitcoin requires a clearing margin, in our case, of 21%. That means that you have roughly a leverage of 5x. Or in other words, it allows you to build 5 times the exposure compared to the money that you put down. And the second aspect is where GCEX comes in. As a prime broker between RuleMatch and their clients, they can pass on the leverage that is embedded in our system, and as Lars mentioned, add even more to it. But I leave it to Lars to connect to this.
Mm-hmm. That's right, as you were saying, right, Lars?
Yeah, no, definitely. So of course we'll do an assessment of the clients of during the onboarding, and we will be able to give more leverage than the exchange. And I think that's also quite common in TradFi. That's also our justification in life. Let's take again CME or the Swiss exchange, but let's just take the CME for simplicity, because they trade crypto as well. You need a clearing member. You cannot just as Joe Block go to the CME. I want to open an account, and that's again the main difference with these so-called crypto exchanges. They'll go for everything. They'll go for moms and pops and clog up the system, as Florian said earlier.
And then try to do a hedge fund at the same time.
Yeah. So that of course they're not exchanges, and it's also counterintuitive that if you want to position yourself as an exchange, that you go for moms and pops. So again, this is designed. So I'm doing the RuleMatch bits now. This is designed to be proper place where institutions they meet. And when I say meet, you trading meet in a proper club, central limit order book, sorry. Then you have the filter between, and that's the brokers or the prime brokers, and that's the likes of GCEX. And again, we have the benefit that again we regulate in multiple jurisdictions, and we can give access to a wide range of professional clients from around the globe where we regulate it. But we essentially the access point to the grown-up clubs like RuleMatch.
And I think this is what is interesting. And also, just as we talk about this from FX to crypto, you, with the experience that you have and GCEX set up as you would be for other markets and with other markets, can now, as we talk about these tools, implement them for your clients so that they have the same toolkit for these other markets and now also for crypto. So trading very fast, trading with very good capital efficiency and with leverage on top. I mean, that would be the ideal setup to win in pretty much any market condition, depending on what you're actually trying to do, right?
We would hope so. So yes, and again, a small PR for GCEX. Of course, with one account here, you can trade, foreign exchange, euro, dollar yen, gold, and the Nasdaq at the same time, or the DAX. So that's again where we come in, the multi-product angle and multi-jurisdictional licenses. And then for this context, the access to RuleMatch, so everything very, very institutional. So and tier one, unlike the so-called crypto exchanges, we don't do retail either. So we also there's some regulatory considerations behind that. So retail, that they just need more protection, and is crypto is still a very, very kind of volatile product. Of course, I guess since we're all on this call, we're long-term believers, and we are long-term happier since the US election. Not to say who won, but we all know what has happened in the last few weeks with the price move, and unless you've been super short, then of course, as you said initially, Ian, it's happy days for all of us. But anyone and their mother can make money in a one-way market, but reality will also kick in. If Bitcoin continues up with this trajectory, then I guess we will be at 1 million by the end of Q1.
Let's not go into the price predictions and so on.
No, sorry, that's not my end, but sorry, but you know what I mean. That of course it's not a one-way street. We will, and that's why we need sophistication and more grown-up attitude, technology and grown-up people to get into this market.
Very good. So that's very interesting. I think hopefully if you've joined us and learned something today, you see how these markets, FX, crypto, also others, are converging in some ways, as you mentioned, Lars. Now grown-ups, the big boys in the room, actually starting to work in the same way as they do in traditional markets. And I'm sure if we come back sometime in the future, we'll see some results of this, and we'll see some effects of this. Will be interesting to keep an eye on that. There would be time for one or two questions from the audience. If someone wants to drop a question in the chat, that is possible. We're open to take all of your questions, except for something related to prices, of course. Maybe I would throw in one question just in the interim, and that is regarding, again, technical connectivity, kind of below the surface, diving deeper still into what we talked about today. Someone comes maybe with a hedge fund or an active trading firm and wants to access these tools. How does it actually work technically, Florian?
Yeah, well, again, we're using what has been proven to work well, and here is to mention the FIX protocol. That's how trading works in traditional finance, and it works very well, very, very fast, very efficiently. It gets better than that. There is a binary protocol by Nasdaq called each and ouch. That is how you squeeze the lowest latency out of the process. So these are the technical ways. There's also a graphical user interface that you can use if if let's say a fixed connection also is not necessary. And then very important to understand is that trading firms, so GCEX clients, they can connect directly with FIX to RuleMatch. They settle through GCEX, but in terms of connectivity, that goes directly into RuleMatch. So the trading experience is basically the very same. So whether GCEX themselves trade on RuleMatch or their clients, the trading experience is the same, and the speed is also the same.
Very, very interesting. So connecting directly, trading very fast. It's seamless, elegant, and straight through in that sense. So
let me be clear. That's the typical prime brokerage setup, right? Mm-hmm. So you have an exchange, whether that's RuleMatch or CME. You have a prime broker, whether that's GCEX or Goldman Sachs, and you have a trading firm that is the client that does the activity. That's the very same principle as we know it from trading traditional assets.
Mm-hmm.
And I could add to that, not only is technology standardized, FIX, protocols. I think it's fixprotocol.org. It's super standardized across. It's not RuleMatch specific. The same with the legal, the documentation from our side. It's also standardized. So you don't need to kind of read everything from end to end. Of course, you should do that, but I'm saying it's standardized because it's we've been working on this for so many years, and we agreed on how to do the contract framework like ISTAs and similar, making the whole journey and easier and safer for all parties involved.
That's also part of the easy to use toolkit, so to say, which makes it very, very easy.
And our contracts are not on the Cayman law; they are actually on the UK law or some EU law. So I don't know if that makes a huge difference, but maybe it should give people some comfort that it's also maybe the governing law we work with at GCEX is also from a grown-up jurisdiction. I know Brexit came along, but still it is a grown-up legislation we have, I can assure you.
And that makes a difference. That makes a difference. Also for people who care about these things that we talk about today. Counterparty risk and who you're working with is something that you can't forget. We at RuleMatch, just to say, have a podcast called RuleMatch Spot On, where I have the chance to interview very interesting guests. One of them made the point recently that it seems like people go back and forth with thinking about counterparty risk. When things are very inactive, they might be thinking about it, but as soon as markets go up, they forget about it. That's not something they should do, of course. And also in these markets, hopefully people aren't forgetting about counterparty risk and who they work with. It looks like we don't have any other questions from the audience. With that, I'd like to thank Lars and Florian for joining today. Very insightful. Hopefully you also took away some key insights for yourself. And if you'd like to talk about this or something else in the markets more with us, feel free to reach out, and hopefully there will be an opportunity to speak together again sometime soon. Thank you very much.
Thanks for having me.
Yeah, thank you, Ian.